I didn't even grab a card or anything. I just had one of the little baskets, and I was just like, "People, please stop pushing into me. I'm gonna lose it."
I'm gonna lose it. I'm in the same boat, man. I'd be like, nope,
I
nope.
just I just don't care with that for that. Yeah, it's like I can't really, even going to a concert drives me crazy. I just can't, there's just too many people too close together. I just
Yep.
don't deal well with that.
Oh yeah.
And
I think the last concert I went to, there was like seats. We had seating, like assigned seating. So it
yeah,
wasn't that bad. It was Polyphia. I don't know if you ever heard of Polyphia.
not off the top of my head, but okay.
Hey, check them out. If you like rock, you'll like Polyphia.
Last concert I went to was Nine Inch Nails. So
Oh, I know Nine Inch Nails.
there you
Okay, I
go.
know the genre you're into. You'd like Polyphia. You like Steve? Do you like Steve Vai?
I don't listen to like I kind of stuck on the late '90s, early 2000s stuff.
Okay, okay. I can respect that though.
Like Lithium on Sirius XM is my channel.
Okay, all right. Well, I know. So you like Three Doors Down?
Yeah, it's kind
Yeah.
of alternative stuff. Yeah,
Yep. Incubus.
there you go. Yep,
Yep.
that's more
I
my
know.
speed.
I know. I know it. I know it. I listen to it too. I know what you're talking about. All right. Disclaimer time.
I'm not as much of a classic rocker as Jack.
Hey, that's okay. That's okay.
But yeah, welcome everybody. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining is kind of what we're talking about here. So it's not a recommendation though to buy or sell any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. I'm just a dude talking about the markets. I have a bag of unicorn dust on my desk here. I don't have any crystal ball. I might get it wrong. So if you want somebody to tell you what to do, you can hire people for that. But I guarantee you, nobody cares about your money more than you. If you think you're going to hire anybody that cares more about your money than you, all they really care about is making your money into their money. That's all they really care about. So welcome to the show
Welcome to the
on
show.
this Christmas Eve.
That's right. And we are live on YouTube. So to all our YouTube viewers out there, we see you.
I don't really see you, but we see you.
I see you. I know you're out there.
I see you, baby.
Like saying over here with my list, checking it twice.
Yeah, Jack did have a an accident over the weekend. The no particulars have been really shared with me. Maybe has a broken leg. Maybe I don't have any confirmation on that. And we wish him well. And when he's back, he's back.
That's right. We have
That's
not heard more than that.
some sort of accident, some sort of potential broken leg, maybe. And that's all I know.
Yep. That's all we know.
So do wish him speedy recovery and hope he's back in action soon. Because
Yes.
this is Blake. This is going to be a regular thing with just me and you. I mean, we did this what 3 days last week, and
We did. We did. And I'll just sit here and I'm just someone to talk to. Sometimes I do this with Alex, if we ever if Jeff's not there, I just sit here and I'm like, hey, you can talk to me. That way you're just not talking to nobody.
I like to think of myself as like the most reliable person most people know. I try to. You can ask my wife. I like. It makes me almost sick if I have to miss one of these shows that I do,
Oh
and
yeah.
I just uh, you will count on me to be here and to do what I do, and it just helps us all make money. So
That's
um,
right.
I I try to be here no matter what, even if I'm sick or injured or whatever. I'm here.
Well, that's there you go. That's how you got to be, man. That's how it is. Well, so okay. So real quick, M Weeks is asking a really good question. They want to. So the SPY is up. QQQ is up today. Yet his calls are going down in value. Why could that
So
be?
so do you know what tomorrow is?
Half day,
Besides Christmas Eve, it's a half day. What's Thursday? Christmas.
no day.
Christmas. Christmas is closed. So today is essentially Wednesday, is actually like late Wednesday, really, in the market. And tomorrow, with only like, half the day, 3 hours or so, you've got, open at 9:30, 10:30, 11:30, 12:30, and then we close at 1. So basically 3 hours tomorrow. And then Friday's OPEX. So they're going to start sucking the premium out, and everything's kind of being lackluster. Plus, add on top of all that, the VIX just made the lowest level in over a year.
Oh my gosh.
Over a year. VIX has not been this low since back here in 2024. So this is, why is premium sucking out? Because of that. Like
That's why.
we're at the lowest level right here. Calls,
Yep.
calls going to get sucked out. Puts going to get sucked out. Everything's going to get sucked out. Now, if you were a buyer of calls up here, you're suffering. If you're
Yep.
going to be a buyer of calls down here, any kind of volatility event is going to spike that kind of stuff. Now, if the market goes down because of the volatility, well, calls are going to suffer also. So, might be time, yeah, as Mr. Sharp says in the chat, it might be insurance buying time. Jump out. You could cover to March or even later with some insurance in the market. What does insurance look like? VIX calls. Just
Yep.
easy as that. Straight up VIX calls. And then we could talk about that. Like, what would that look like? I mean, let me bring this over, load off the platform here. So you can fly out to March, 3 months out. That's generally where the big players play. When I buy protection, I usually shop around $1. That would require a pop. Now, it doesn't have to get to 35 to make money. Even a pop into the 20s is going to make these 30s make them go up pretty good. And we can see that illustrated. Let me jump this over to a little bit higher time frame so we can see more time here. See, back in November when we got the spike, this thing went up. They were hanging out down at $1.57. They spiked up to $2, $3, in fact, at the high. Then they jumped again right here, November 17th. That big flush out. See, this flush out at the end of October was the bigger scare in the market. Now, what didn't respond, though, is back here, October 10th. We don't really see any kind of response here, October 10th, when the big flush out. This is where, see, like this big spike here, October 10th didn't really cause the biggest spike. We got the initial pop, but then the bigger spike happened right here, October 17th. So looking at these respond. Now, these were like 6 months out. You have to remember, October 17th, see, we didn't get much response there. They didn't really go up big. But this one, October 30th, that's where we started getting more response. That was the big spike right there. October 30th on VIX itself wasn't really anything. So those options jumping like that didn't make any sense. It's one of those where if you play VIX calls, when you see profit, it's time to book it. Unless you're part of a bigger flush out, scary thing in the market. So generally, I like to play those that cost around $1, about 3 months out. Why? It's just what I've learned tends to work. Now, if we get even lower down in the like 12, maybe even $11 VIX, rolling in with some 50-cent VIX has tended to play pretty well. Tended to pay pretty well. Now, those probably won't be up here in the 50s. They'll probably be down here in the 30s if we drop on down like that. So, if you tend to try to play out further than 3 months, usually you'll just pay a lot of money and not ever get any advantage on VIX. Another way you could play, though, is to do some sort of debit spread. And remember, VIX is going to respond, since we have all these contracts, wherever the volatility is, that will tend to be the one that responds. And since everybody knows that volatility doesn't stay high for very long, it's usually limited to a few days. Those contracts that aren't in the expiration of the volatility event won't respond nearly as well. So VIX has a different response than most calls. Most calls, if you get a stock that pops, pretty much everything in the future is worth even more than the current. But that's not the way VIX works. VIX, when you get a pop like this, the contracts here in November went sky high. The contracts for December may not have responded very much at all, even on this big pop right here, because the market knows that this is not likely to stay elevated up here for longer than a few days, and then we're going to take it back because that happens almost every time. Now we could get a double spike, but the current, the month that OPEX occurs in. So what I'm saying is, like, if you had March calls on VIX, if you had March calls on VIX, and we got a volatility event here in January, while January calls may go up like 300%, these ones out in March may only go up like 50%.
Well, also just thinking about this as well, like a lot of people look at the VIX, but the VIX itself is a depreciating asset. Like,
Well, it's the VIX itself is it's a reversion to rest. You know,
mm-hmm,
it doesn't trend. It's a non-trending
right,
asset. VIX,
exactly.
all the VIX derivatives are, decaying assets because of
Oh,
this.
like VXX or UVXY or something like that.
Right. Anything long VIX is a decaying asset because there's no price appreciation in the long term.
Right. So if you're going to buy VIX calls, it essentially is just a hedge entirely.
Right. Because we're going to revert to the mean. All these spikes, even though it looks like somebody's, an EKG or whatever, you can think about it. Your heart rate always comes back to rest.
Mm-hmm.
VIX always comes back to rest in the market.
Right.
Like we get a little, and then we come back. Get another little, and we come back. And we get another,
Always.
always comes back to rest. And that's why, calls, as soon as you have profit in them, you should book them. So
Mm-hmm. Is
I
there an ETF that would be good to buy shares for the VIX? Well, that's what we were just talking about.
see, like, this thing decays. Like all the ETFs, like, the longer you
They're
hold it,
just,
the more
yeah,
the more it's going to suck. And
exactly. So you would never want to buy shares of the VIX. That's
it's
it's
like
just never going to work.
UVXY. The longer you hold it, the more money you lose. They just did a reverse
Exactly.
split here. And there's a whole nother series of tickers that does this, and it's on natural gas.
Oh, really?
Because natural gas tends to not trend. It tends to just sit. Like, this is the 30-year history of natural gas. It doesn't, there's no trend. It just sits. And we get little spikes and dips and, but essentially right around $3 has always been the price of natural gas. We started out a little lower, we went a little higher, now we're a little lower, a little higher, a little lower, and a little higher. Right around $3 is the average price of natural gas. So that means anything that is long natural gas, due to the carry costs of being long natural gas, will go down. And another one, oil, tends to go down. UNG tends to go down. Cold, this one's interesting. This is short natural gas, but when you get a big spike in the price of natural gas, it destroys this thing. Otherwise, it tends to go up. And that's the same thing you get on SVXY, which is short VIX. It tends to go up over time until we get a big volatility event. And then it gets punched in the face. What's funny is this volatility event in 2020 was the biggest volatility event in history, but this one was actually more detrimental to VIX than this one,
Hmm.
to short VIX. And you can see these little volatility events we've got more recently. and now we're just coming back up.
Well,
So
now we've got another request in the chat too. I like this one. I'm a big gold guy. He wants to take a look at GC.
yeah, gold pushing out, but it's also kind of it was stalling out early this morning. Now we're pushing a little higher.
Yep, it was stalling out. Now it's on the grind back up. It's looking to. It just confirmed technically on the opening range. It just broke above the high a day. So if you're an ORB trader, you're thinking long.
I do have delayed data, so I'm sitting 10 minutes behind real time.
It's at 44.93 right now. That helps.
Yeah, I mean, I can look at the real price
Oh, you
on.
got Tasty too.
Yeah, I was gonna say I can pull up.
Yeah.
Here's the live price 44.97, and you just /GC is how you would pull it up on a platform like Tasty or E-Trade.
Mm-hmm.
/GC. That's generally most trading platforms. You /GC or /ES or any other future ticker. How you know the future ticker? You just have to Google it. How do I know how to pull it up on my platform? You just have to Google that too. I just it's been / on most platforms. It took me a little while to figure out it was one exclamation point when you pull it up on TradingView.
Mm-hmm.
And if you want a particular ticker, like you see, this one has GCG6. That's the expiration in 2026 for
Oh,
February.
that's February, yeah, because they just rolled over all the contracts.
And it goes like this. You go GCG 2026 in TradingView, and it pulls up that specific contract. Now, GC1 exclamation point, what it does, it creates a constant contract that automatically rolls over. And these rolling over are shown right here, where we go from the November contract to or I guess from contract December to contract February. Now, every future has its own kind of like which months are the active months. And why does gold move to a February contract? It's just the way it is.
Yeah.
Every future's kind of got their own way they do it.
Yep.
And oil, they
Ooh.
rolled from January to February. And they rolled by a month. ES tends to roll in 3-month increments. We went
Mm-hmm.
from December to March.
Now, keep in mind, these are the futures contracts. So, if those of you that trade options for gold, you'd be looking at GLD, would be the one I would trade.
And I caution on GLD because this even though it's Spider and all this, they have failed their audits for
Oh,
years.
really?
And the Sprott funds, PHYS, physical gold, actually have passed their audits. So if
Really?
you really wanted gold exposure and no risk of like paper shenanigans, this one's probably a better place to play PHYS.
What about BlackRock's IAU? That's their gold ETF. Does BlackRock do good?
I don't have any kind of data on BlackRock, but
Uh-huh.
they're in with the big banks and the shenanigans. So I do
Keep it
caution
caution them
anytime.
as well.
I caution anytime you're playing like that. So um, if you just PHYS, if you want to, this is as
Yeah.
close as you can get to owning physical without going to the coin store and buying it yourself.
I'm gonna write that one down because I've never heard of PHYS. That's a good one.
And
Ooh,
you just have to remember the Sprott funds because if you type it in TradingView, SPROTT, you can find all of these for copper, for lithium, for gold, for silver, for nickel. They're all right here. In fact, somebody was asking me earlier about how to play platinum and palladium, and it's SPPP right here.
there you go. Yeah, platinum's doing really good. I think it just hit some highs, right?
Yeah, and this is a lower price ticker compared to like PPLT or something like that. 24, 27 up from 18. I mean, this could be a pretty nice upside right here. It's got my pattern. We're not, hadn't run away yet. Could be a 50% upside here, SPPP. Now, the options are going to be very limited here. If you're trying to play options and get more leverage, we're not going to have a ton of options on stuff like this. So you'd be like, I'm an options trader. Options trading is not always all it's cracked up to be. I make tons of money just trading shares often enough. And that right here, you can look at the trades coming down in here. You know, Dollar Tree, 5,000 bucks, 25% right there. Big chunk of money just on shares. Bought down here, sold up here. Boom. So anyway, I digress.
Said I digress.
I'm doing pretty good on this account right here. I'm
That's
hoping
really
to.
good, man. Look at that. 50K almost on the year. Woo!
I'm betting. I'm betting. I'll bet with you. I'll bet you I can get this to 50K. I bet you it'll hit 50K by the end of the year.
Oh, I bet you it will.
That's only 6 trading days, including today. We got today, tomorrow, Friday, and then 3 days next week.
Woo!
So
Man, gold.
I'll bet you when we come in, yeah, I bet you I can hit it before we close the day on the 31st, but I bet you when we come in the second, this will have been over 50K. So
Well, we'll hold you to it.
there you go. If I lose, I just
So
didn't
there
make it.
you
Yeah.
go. Hey, don't try to force a trade. Now, I tell people, I'm like, look, on the evening edge, I say, would you take a trade? Every time you take a trade, would you bet your house on it? I think you said that.
Yeah, I said that. Yeah.
You said that. I took that from you. That's really good.
I mean, are you confident enough to risk your house on a trade? And it's, that's really like, if you're not, why the why are you putting any money at risk on a trade?
Right. Even $100.
Yeah. So
How's your DJT doing?
so look at this little move here. It's kind of crazy. This thing paid me yesterday. I sold the 1750 strike calls for 55 cents. Sold 12 of those. This is how I know I'm going to hit 50K. That was 660 bucks.
Yeah.
And so that's 660 bucks toward hitting the 50K for the year. These were this
Cool.
Friday's. This Friday's. And now they're worth 3 cents right there.
Oh man, yeah. Keep on doing it.
I might
And
even roll those.
you got one less day this week too. Actually,
Yeah.
are we really counting tomorrow as a full trading day? Like,
I'm counting
no.
it as a day because I'm going to try to make money, baby.
Are you? Yeah. I might wake up and trade the futures in the morning, maybe. Or I'll trade tonight during like the Asian and the London sessions because those are probably going to have more volume than the US session will.
I'm going to roll in here tomorrow. I mean, I'll just tell you right now, like I'm gonna play my beer money trade tomorrow,
Are you? Okay. Awesome,
and
Jeffrey. Oh,
I'm gonna trade it today. I'm gonna trade it tomorrow. I'm gonna try to trade it every day to the end of the year.
smart money doesn't sleep.
Hey, an open day in the market is a chance to make some money. And right now, this thing's got premium all the way down here at 2,500. If you've never seen this beer money trade, I roll in here 3 standard deviations below the money on expiration day, about 1:30 in the afternoon. Sometimes a little earlier. Yesterday I went a little earlier. Right before we wrapped up the show, I started looking for it. You got to be 3 standard deviations. Now, this trading platform, how do you figure out 3 standard deviations? This Tasty Trade makes it really easy. They put this dash line at 1 standard deviation. They put this dash line at 2 standard deviations. And 3 standard deviations, you just have to kind of count, right? These are 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Basically 6 strikes. So 1, 2, 3, 4, 5, 6. Roughly right here is 3 standard deviations out. Confirm it with this probability of profit is what that stands for. POP greater than 99.5. 99.7 is 3 standard deviations, but they don't go higher than 99.5. That's essentially 3 standard deviations. And you'd play right here and try to get about 40 cents.
Now, is NDX, is that like the SPX where there's no underlying to a sign? Is that like a derivative?
Yeah, this is cash settled index fund. You can't like, there's no bid and ask, so you can't click on it. You
Right. You
can't.
can't buy the underlying. It doesn't exist. It's the
And,
speculative price of the NASDAQ, basically.
yeah, this is it's option index options, and these are European
Right.
style. There's no early exercise, which wouldn't come into play because I'm playing 0 days. I'm always playing the PM settled. Never want to touch these AM ones.
Yep, I've learned that too. I learned that the hard way one time. I was like, wait a minute. I was like, why am I not in this trade anymore? And I was like, dang it, I took the AM call.
Yeah, the AM ones expire the day before,
Yep,
but the settlement price on it's not till the next morning after the open. So,
precisely. And I was like, man, I'm still in this. Nope. No, you are not, Blake. You are out. This expired.
so I roll in here roughly 1:30 in the afternoon. Like I said, plus or minus a little bit. Why 1:30? It's because I did a whole lot of statistics on the expected move and the time of the trade and the premium and a little bit of empirical data on me trading options for 9 gazillion years. And knowing that somewhere between noon and 2 o'clock, the premium starts to erode very quickly into the day on
Yep.
expiration day. And some days it starts at noon. Some days that doesn't start till 2:30. They'll hold the premium in there and then start eroding it. There's no universal. There's no like, what can I do every day? It's not that simple.
Right.
Um, and if you're just one of those people that doesn't want to do the work, don't play this trade. But what I'm trying to do, and it's very simple. What I'm trying to do is roll in here, have a 99.7% chance I'm not going to get in trouble, and collect about $40. Now, you're like, well, that's a $50 risk, $5,000 risk for $45. That's stupid.
Yeah.
Most
Wow.
people, that's the way most people think about it. That's stupid. What if it goes against you? One, there's a 99.7% chance it's not going against me. And with only 2 hours left in the trading day, that's very little time for shenanigans to happen in the market.
Absolutely.
Now, $45 with 49.57 required margin, that's 0.009% in a day. There's no divide that by anything because it's 0 day, but we can multiply it by 250 trading days. That's 226% annualized return. 226%. That's higher than a lot of the trades Jack and I talk about. Only paying you 45
You're
bucks.
you remind me of how Chris Pulver always talks in the morning. Got the same mindset as he does, man. He'll risk a little bit more for a super high probability trade to make money.
Yeah, I mean, that's we're not even holding the risk very long. 2 hours
No.
of risk
Yeah,
for
it's not that long.
like 200% annualized return.
Yeah. I mean, I know people that'll hold 2 hours of risk and lose it all. So this is a pretty
Yeah, that's it's a
reasonable way to play
99,
it.
you know, and for people that have trouble thinking about this, there are 250 trading days in 2026 right now, unless they change something. The calendar has 250 trading days in 2026. So 0.997% chance to make money, 249 and a quarter days. So that leaves one day possible, 3/4 of a day in 2026 that you might get in trouble. And really, when you look at it, it's, um, that is going to be one to get to the one. It's 0.997 times 333. So every 333 trading days, you get that one day, 1 day out of a year and a half, basically, that you're going to get in trouble. So less than 1 day, you're likely to get in trouble. That means you should give 250 of these in a row. Now, if you're putting all your money at risk, that one's going to blow you up. But if you're controlling your risk, like Jack and I talk about, not putting all your eggs in one trade, then the one trade, even if it gets you, now that's just what to add a whole new level of concept to this, that's the probability that this strike, the short strike, gets touched. It's not the probability that this whole trade goes underwater. That's even less likely. That's almost a 4 standard deviation. When we're talking 99.9% chance that it goes through both your strikes. And it takes, that's where people really get off base on this. We're talking about 250 times 0.999. It may even be a fourth nine, but we're talking, less than a quarter of a day chance that you go all the way in the money. So could you take a loss? Sure. Maybe we're talking 0.3% chance you might take a loss. We're talking less, even less than that. 4 sigma. I can't remember the percentage at the moment. I'll pull it up on Google. It's 99.9937 is 4 standard. It's 4 standard deviations right there. 99.9937. So it's 99.9937% that you would, not go all the way through both strikes. That's why I play the way I play. The max loss is extremely rare. Any questions?
All right, I'm
So,
back.
I was just explaining that, 4 standard deviations is really what it would take to go through both strikes. And that would be like 1 in 2 or 3 years. So the trade is you roll in here 3 standard deviations away from the money at 1:30 p.m. I call it the beer money trade because it's picking up like $40. You'd sell this one, you buy the one 50 strikes below, 50 points below, 10, 20, 30, 40, 50. And
Do you ever
I try to get about $40.
do you ever put this like trade out in your Discord or on Telegram for anybody?
I post it on X every day when I do it. I've got
Oh, really?
40, I've done 47 of these in a row.
Well, shoot. Do you want to share your X account? I mean, I can't get on X on the work computer, but there's just some people in the chat that are asking about it because they're highly intrigued now.
Yeah, let me pull this up, and it's just
Yep.
x.com/Jeffrey Turnmeyer right here.
Yes. And I will
Oh,
just add a little disclaimer. Keep in mind, if all of that on the screen looks like a foreign language to you, I would sit this trade out.
yeah,
If
there's no reason to put your money at risk, but right here, I post them right here.
Yeah,
Here
that's
was
awesome.
yesterday. Did a NASDAQ 0-day credit spread today, 25 300, 25 250, 50 wide with 50-cent credit. Collected $50. That's a 1% return. It was greater than 99% chance I keep all the credit with less than 2 hours left in the market today. That's what I did. I did 6 contracts. You do the math on that, it's $30,000 to make $300.
Beer money.
Beer money. That's a couple cases of beer, $300.
Absolutely it is, man. That's like that's some Four Roses, man. That's some nice whiskey, you
So,
know?
so
I forgot my coffee. One
I'm
second.
not saying anybody should do this trade. I do this trade. I like doing this trade. Now, people look at it and they're like, well, there's no open interest. Doesn't matter. 0 days, get played. Look at how many contracts have traded today, all the way down in here. The volume, 500 contracts down at 25.50. I mean, look at the volume, all the way down here, hundreds of points out of the money. Why? I don't care. I don't care the why. I haven't really figured it out, except that it has to be some sort of market maker hedging, and I'm
Yeah.
just taking the other side and making a little money. It's easy,
Ooh.
it's stress-free. Jacob Sharp's made, thousands of dollars doing it. And I mean, it's just one of those, like, if you like it, it works. If you don't like it, if you're going to be a nervous wreck, don't do it.
Yep, exactly. Exactly. That's like one of those trades. Like I'd probably just take one contract.
I took one contract for, I've got 47 in a row. Before October, I was just freaking e-wagon. I was educated wild guess. Um, the A would be the at sign, dollar sign, wild donkey guess, just educated guess. I was just wild guessing. I didn't have any statistics. I didn't even look at the three standard deviations, didn't look at the four standard deviations. I was just guessing. I was like, yeah, I'll make 20 bucks a day.
Yeah.
And I'm playing. And then October 10th happened,
What happened
and
October 10th?
that candle right there happened.
Oh, yeah. That one will happen. Yeah, you'll get those from time to time.
I was like, yeah, we don't tend to drop that much into the close, maybe, and
Nah.
I just went after it, and guess what? It ended up closing just right under. I'm pretty sure I played 24 250 as my short strike, my long strike down here, 50 bucks, and it went in the money and freaked me out. And when we got to the low, I actually closed it and took a 13 per contract loss. When if I just held it, I would have only been at like a $3 per contract loss, or something like that, or maybe a little more. I think it was at 24 250. Maybe I was at 24 30. I don't know. I was somewhere right in here. 24 25 maybe. I'd have to go back and look. Anyway, it was a smaller loss if I just held it into the close. Now, hindsight, I closed and got the stress off and made all the money back in 10 trades. I made all the loss back in 10 trades. So, yeah. But then after that day, I started doing statistics on this trade and
Start running the numbers.
figured out that where I played was stupid. I was dumb and I got hit by a car. And I was playing in the street, not looking both ways, and I should have been looking both ways. Now,
That will happen sometimes.
now after I took that information I learned here, here's the lesson. November 21st happened. Look, this candle is that big, right? This candle is much bigger. Did I get hurt that day? No. I was 800 points below where this thing closed with my trade on that day because I was now smart and knew how far down I should be playing. Now, 800 points may have been too far. Like I may have been too conservative, but didn't matter. I didn't get hurt. Didn't, you know, I made all my money back. I wasn't going to risk losing this money. Now I know there's a trader with us that did lose money that day by not playing with the rules. There's a reason 1:30 in the afternoon.
That was Nvidia day right there, wasn't it? The day Nvidia after they gave their earnings.
Yeah, I believe that was probably,
Yeah.
and it was a big down day.
Yeah, that was like a 2 trillion market cap swing in just one day. I remember that.
And see, we came in and we gapped up, opened up here. Everybody thought, we're going back to all-time highs,
Yeah.
and then we closed lower than the day before, bearish
Yep.
engulfing candle.
We did.
And so that was a dangerous day. But by the time I played at 1:30 in the afternoon, I was I was down here, way down here.
Yeah. Oh yeah. And it wasn't going any lower than that. I mean, because I remember too that day there was some positive news to end the day. I can't remember what happened, but there was a reason we bottomed out there. And now we're trying to push back. Just can't
And
remember what happened.
so not every day's the same. You can't just say 300 points. At 300 points is usually where I start looking. I usually, there's some commonalities. Usually I start looking around this $2.75 to $2 area for my short. Usually. That's usually somewhere where three standard deviations is. Right in there. It's not always. Sometimes three standard deviations is further up here. Sometimes sometimes it's sitting right on top of this line and I'm like, something's wrong there. Now, the percent of profit. A lot of people are like, well, can't I just use delta? Not really. I mean, you can kind of, but you're looking for a delta of like 3. And delta doesn't always match the 3 standard deviation. So, got to be careful. Now, could I get in trouble? Yeah. How much could I lose? $5,000. Period. In a story. Now, what would I close at? Probably 10. Like if I get paid, if I get in for like 40 cents, even 30 cents, I'll probably close at 10. Why 10? Maybe 12. Because I can make that back in about a month. Now, 130, 130 to the close at 4 p.m. Eastern. Big moves, 3 standard deviation moves, about 4%. If you add, if you're like, I'm only free at lunch, I'm going to go in at noon and do the same thing. Going in at noon adds 2% more potential move to NASDAQ. 2% is at the current price is 500 more points of potential move added on to the 1,000-point potential move here. So you go from that's 50% more risk by adding 1.5 hours to the trade. I don't like risk. 50% more chance to lose money. I'll stay over here.
Yeah, no kidding.
Now, what's also interesting, the last 10 minutes. $200 is what it can move. The biggest moves in the last 10 minutes, 200 points. So don't think you can just roll in here late, like 3:30, get real close to the money. There's a sweet spot right around that 1:30 time frame where there's enough premium you can be far enough away from the money to get paid and be safe. Whereas if you wait much past 2, it's starting to be a little sketchy. You got to be careful. If you get in past like 3 o'clock, you better watch it like a hawk till the close. So I let them expire worthless because the fees closing NASDAQ are expensive. Like $1 each way per contract. I'm collecting 40, $50. Paying $1 is not too bad. It's not exactly my favorite, but even if playing at Robinhood, they still charge you like 50 cents a contract or so. 30 cents, something like that. There's a exchange fee for trading NASDAQ that doesn't happen when you trade other CBOE. These are not CBOE options. These are index options run by whoever it is. So they have a different fee structure than like playing QQQ or something like that.
Indeed, they do.
Now you might be like, why not just play QQQ? It doesn't work. QQQ trades. So when the bell rings, whatever price this is on NASDAQ, that's the price. There's no extra 15 minutes. There's no extra innings. There's no extra rules. Whatever the close price is, that's the price that the options get settled at if you're in the PM settled options. Whatever this final tick is for the day, that's the settlement price. So if these are out of the money, boom, they expire worthless at the close instantly. If they're in the money, whatever this number is that they're in the money, you take the close price minus your strike price, whatever that is in the money, minus whatever, that's what you owe. It's cash settled. So they'll take the cash out of your account to settle that.
Now, here's a question. What's this new 24-hour trading? A lot of people are talking about it. It's a big thing. I think
Yeah.
it's already a thing on a lot of tickers. There's 24-hour trading. Is it 24-hour options trading? I have not heard. I
Yeah,
mean,
so NASDAQ wanting to run their market 24/7 is different than the CBOE running the options market 24/7.
Correct.
As far as I have heard so far, the options market's still going to be 9:30 to 4.
That's what I thought. Because everyone's been talking about this 24-hour trading. I'm like, I don't think you guys realize it's already a thing
Yeah.
on a lot of tickers. Like if you just go on Thinkorswim and you pull up a chart, add a position, there's usually a 24 next to that ticker because
Yeah,
most of them already trade 24 hours.
yeah, Robinhood, Webull, I know trade 24 hours. E-Trade cuts off trading. E-Trade, Tasty Trade, they cut off trading between 8 p.m. and 4 in the morning. But the ones that have 24-hour trading, like Robinhood and Webull, and I forget who else. Um, yeah, you can
Oh,
trade 24.
Schwab.
Schwab might. I don't know. There's this, you have to be careful because there's a weird, even on here, if you bring up something like Apple, that I know trades does 24-hour trades, but when you look at the data, the market doesn't actually keep track of what happens in the
Oh,
wee
between certain
hours.
times. Yeah. Yep.
Yeah, they actually cut it off. Like the last candle right here, 8 p.m.
8 p.m.
First candle, 4 a.m. There's a gap. And
Yeah. There is a
that,
gap in there.
so NASDAQ's not actually open. This data comes from NASDAQ. There are platforms that trade in through the dark pools 24/7 and for liquidity, they use the dark pools. But right here, the actual NASDAQ itself is not open from 8 p.m. to 4 a.m. And that's what they're wanting to change right there. And so at that extra 8 hours a day, you can get the data in there. And they they do shut the exchange down for the weekend too. Like when we
They
get to
do.
Friday at 8 p.m., right here, Friday 8 p.m., we shut it down, and then we don't open until Monday at 4 a.m. So they're trying to help fill in this gap. Now, just because the exchanges are open doesn't mean options are going to change because
Exactly.
that's a different governing body.
Totally
Everything.
different.
So even though you have Apple, and it's run by NASDAQ, NASDAQ has nothing to do with the options on Apple. That's a whole different market.
That's right.
Funny enough.
And the SIBO, they didn't even come around till what, like the 90s or something like that?
Yeah.
Like the SIBO-E is a relatively new organization.
And CBOE runs options right here.
Yeah.
They have different, this is Chicago Board of Options Exchange right there.
Mm-hmm.
And they kind of govern. Now, not everybody, what's funny is the CBOE doesn't necessarily run all the options products, but they coordinate all the options products. So it's very complicated. Very
It is,
complicated.
isn't it? It
And
is.
you think that there's only one, like you think there's dailies and monthlies and stuff like that, but look how many different options expirations you have to keep track of for all this stuff. The VIX has its own whole set of options expirations. SPX and XSP has their own, and up here, regular equity ETF and options, standard expirations, settlement days, last day to trade, AM settled, PM settled, all that stuff's in here. Exchange holidays. I mean, they just got all sorts of shenanigans that go on in here.
Indeed, they do.
So if you ever thought it was simple, like there's nothing simple about this. There's nothing. You look. There's no 2 weeks a month that are the same. There's always something going on different. Pretty much. Occasionally you get like 2 weeks in March that are kind of the same. 2 weeks in February. But most of the time, you got different shenanigans going on every week of the market, and that's what creates these weird dynamics that never seem to repeat month to month. Is that the options expirations are all different every month. Now, a lot of people will be like, well, what can I learn from that? Trust me, there's no real exploitable anything there. If there was, I'd probably be doing it. I've learned so much about the market. Like I talked about kind of at the beginning there. For 20 years, I tried to learn more about the markets, and turns out there's not very much that gives you an edge. Just a few things. Once I started figuring out a few things, I started winning a lot and started and became a guru and started sharing it. And I feel like the things I know are things that are repeatable and easy for others to do because I figured it out as just a regular old guy. As Jack, compliments me, I'm the only one here that in the company that hasn't worked in some capacity for the stock market, for the exchanges or, on Wall Street. I'm like the only one. So I figured some stuff out all by myself, and I just want to share it with people like you watching here to try to make us some money. So like this Nasdaq thing, this didn't really exist a year ago. Like why? Why is it here? I haven't figured it out. I've talked to lots of smart people. I showed it to Jack, and Jack's like, that shouldn't exist.
He's like, that's a money glitch.
Yeah, he's like, why would they? Why? He just straight up didn't understand why anybody's trading down here in these sizes. Like my little, even if I push 60 contracts, which would get me to my 50K challenge number, 60 contracts a day, collecting $40. That's actually $50,000 a month. That would be nothing in these hundreds of thousands of contracts trading down here. It's just crazy, right?
Yeah, that is crazy because that's something, I mean, those contracts are expiring and they still have value and they have to go down. I mean, there's something's got to happen with all that premium. It's just going to go away. So why not sell them?
Yeah.
Someone's going to buy them. I mean, people do it all the time. There's probably people that are gambling SPX puts or NDX puts or, all the time.
Now the long tail, if this plummeted out, you'd make huge money. But it's, I mean, you see, like there's a big chunk right there. Somebody sold like 108 of them.
That's crazy. That's a lot of risk.
Sold or bought, I don't know, 108
Yeah,
right there. And then
108 of them.
one big block. And that was all the way down at I don't even remember the strike I pulled up. That was 25 150. It was a 25 150. So that's what that is, 400 and almost 400 points out of the money. Why is it here? I don't know. There's people playing it. I don't know. People have said, well, I think it's hedges and I think it's market makers hedging their positions. And other people tell me, no, market makers all play in the futures and they wouldn't play in the indexes. And you go and look at the futures and you see these big numbers here too. 0 days. But these, you got to be careful here though. Futures don't represent the same size contracts as index options. So if you sell this right here, you look at the price and you're like, wait, that's at $1.75. Why is it only 35 bucks? Because the contract size here is 20, not 100. So different games that get played all through the market. And like I said, I spent years learning all these different little quirks. I still, when I find something new, I still go dig into it, try to find the quirks. Doesn't mean there's anything exploitable. And I did start out playing this in the futures. People are like, why don't you play S&P 500? I found that on S&P 500, you had to play first thing in the morning, sometimes before the open on ES to get the premium. Otherwise, as soon as the market bell rings, they start sucking the premium out in SPX. That doesn't happen in NASDAQ. I don't know why it doesn't happen in NASDAQ, but as soon as the opening bell hits, of course, look how many more people are playing. And this may be why. Look at the volumes here. Here's 3 standard deviations out of the money. There's like 10,000, 20,000, 15,000. Coming down here, thousands, 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 thousands. And that may be why the premium's gone, like because of how many people are playing. NASDAQ moves bigger too. So This one's less likely to make big moves. But when you play in NASDAQ, there's a lot more strikes that we can cover in a day.
Same with like SPX too. I wonder if this would work on SPX as well.
Well, that's what, I just had SPX open and you can
Oh,
see
did you?
that's what I was pointing out was that there are tens of thousands of contracts.
Oh my gosh. Yeah, look at that volume. That's crazy. Look at the volume. What is that? 6850?
Yeah,
40. What the?
40,000 contracts down there.
Somebody must have bought those like earlier this week or something.
That's volume today. So
Oh my gosh. 40K. What did they buy them at?
right there you go. That was a block of they've traded 50,000 contracts right there
Well,
yesterday afternoon.
hopefully they sold them because the market's rallying.
Somebody bought 50,000 contracts yesterday and it looks like they're selling some of them out.
Whew. Today, right now.
So maybe that was a buy, or of course that could have been a sell. Somebody could have
Wow.
sold 50,000 contracts.
That had to have been a sell. If somebody bought that many, I'd be like, what are you doing? It's Christmas. We got the Santa rally. It's right in the time block. We
That's
know this
like
because we talked about it.
where's the other, like if they did that, what are they covering with?
Right, exactly. What are they covering with it?
I mean, maybe I don't know.
I don't
That's
know. It makes no sense to me.
so it's wild, right? I mean, maybe it was just the spread was right there. Maybe that was just a $5 spread right there. They just did the
Oh, it was Jax. It was Jax. He did the 6850 strikes. It was a bull put credit spread. That was him. All those contracts.
40,000 contracts, man. You made out. It looks
I
like.
I knew we had a whale in here. He appears.
So anyway, that's there's shenanigans all the time out here.
Oh yeah. Well, there's got to be, right? It keeps the market moving, you know? It's like that childhood picture they give everybody, you know, and it's like complete the box, you know, draw the picture in the box, but the only way to do it is to like actually go outside the box, and everyone's like stumped. They're like,
Yeah,
"Well, I can't do this. I can't draw the picture." No, you just have to go outside the box.
it's like connect 9 dots with 4 lines or something like that.
Yeah, and the only way to do it is to like go outside of the box, and no one can solve it because they're like, "Oh, I can't think outside the box."
It's like here's a dot, 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 here's a dot.
Yeah.
The only
Yep.
way the only way to connect them with like 4 lines is to like go like
Yep. Yep.
or something like that.
Yep. No, that's it. That's the only way to do it. There's no way else to do it. You got to think outside the
One,
box.
two, three, something like that.
Yeah. Yep. Exactly.
Anyway,
Oh man. VIX calls. What are you asking about, administrator? Can you go over the VIX calls you did when you became a guru? When were they also 85 days out? What's
we'll
he
we'll
talking
have
about here?
to we'll have to talk about that next week.
Yeah, it is that time, isn't it?
We have to wrap this up today. I I did Blake, you probably don't know how I got to be a guru exactly. I mean, you've probably heard bits and pieces of the story, but
Bits and
back in 20
pieces.
back in 2020, I made $1.4 million on the COVID drop in March. I went from having about $250,000 between my mom's retirement account, my dad's retirement account, my retirement account, my wife's retirement account, all of that money across my family, about $250,000. My parents, not young, they're in their 70s, so didn't have a lot of retirement. And I kind of was at the right place at the right time with the right people, hanging out, looking at the right stuff. I had learned Elliott Wave several years before that. I knew that this big drop was probably coming. And I got into UVXY is what I was starting with. And this is a different chart than it was back then. Um, back here, 2020. I started in January. I, you know, wasn't really working out. Caught that little pop in February. That's where the virus news kind of first started. Then we
I remember
retraced
this.
again. And I jumped out to March and started playing some contracts and then started catching this pop. And I closed, as I made money, I closed it, recycled it into cheaper options. And somewhere in here, the UVXY options got too expensive to play, and I switched to VIX. And I got to where I was riding 150 VIX contracts. And on the exact day we topped out over here, I closed 150 VIX contracts for 20, I think it was $25 profit per contract. And that was basically about somewhere in the neighborhood of 550 to $600,000 worth of profit between here and here. But that wasn't 1.4 million. That was only about a third of the money. Another third I played on not EWI, EWZ, EWZ, which is Brazil. I bought some puts, like 40 strike puts, I think it was,
Hmm.
that cost me 20 cents. I bought several of those, like a couple hundred. They went, EWZ went down to 20, a little bit below 20. 40 strike puts at 20 are worth $20 a piece. So that was another $600,000 or so. Whatever that was, like 300 contracts. I don't remember. So that was another third of the money. And then the other third of the money I made all over the place, short and stuff like Disney, Uber, Apple, everything that had to have people show up at their stores or show up at their amusement parks or show up, people needed to show up in person, Delta Airlines, United Airlines. I shorted all that stuff and all of it got punished. And that was the other third of the money, another whatever that was, 600-ish thousand dollars. All in all, that's like 1.4 million profit. So that was, that was profit on top of 250,000. So it was actually like 1.6, 1.7 million was what we walked away with. My
Whew.
parents used that money, that was big money for both of them. They both were millionaires at one point in time. And, now they don't have that much money. They settled some debts and all sorts of things. They were both old enough that they could pull money out of the retirement accounts.
Absolutely. No fees
And,
or anything.
and everybody wonders, why would I even become a guru at that point? All the money I made personally during COVID, all of it, 100% of the money I made in my name was all in IRAs for me and my wife. Not $1 was in a taxable account that I could use. And I was not about to start paying fees on profit I made my IRAs. So even though I made $1 million trading, I I still had to live like I've been living. Um, you know,
Man.
at the time I was making less than $40,000 a year taxable, less than 40K um, a year.
Which is about the average wage back then in 2019, 2020. That's right on average.
Yeah, so in Knoxville, I could live pretty good for
Yeah,
40K.
absolutely you could.
It's not a very expensive place to live, and but you know, every week every month we're trying to figure out how to pay for everything. How what are we paying for? What are we not paying for?
Right. It's kind
So
of tight.
um, rock along. I've made some money as a guru, but the swings are incredibly difficult. Like when I launched my thing, I had a big year, but the next year came along, everything slowed down. I didn't have a big following. I didn't have a big, I didn't know how to treat people. I didn't know how to, there was a lot of things I didn't know coming into being a guru. And even though 2021 was an awesome year, I got money for launching my product, my echo trades and stuff like that. Coming into 2022, I didn't have any follow-up. Echo trades dried up. The sale push, everything kind of dried up. And 2022 was a down year in the market. And I ended up having to pay back all the government support. If you're at 40K, you get a lot of government support. They give you child tax credits. They give you Obamacare. They give you all sorts of things when you're at 40K a year. When you make I made, I think 200, like 200K this year. Well, guess what? You get to pay back Obamacare. You get to pay back the child tax credit. You get to pay back. And in fact, it was payback 2 years of Obamacare because they didn't take me off of Obamacare because by the end of 2021, like late in 2021, I hadn't filed my taxes for 2021. So they automatically re-enrolled me into 2022. So I actually got to pay back all of 2021 and all of 2022 Obamacare in 2022 when I did my taxes. That freaking hurt.
And Peter just wants to know, were these spreads that you were doing or just like straight up calls and puts on
Uh, there,
UVXY?
there were no puts. It was all calls.
It was all calls. There you go, Peter. All calls, baby. I like Peter. He's a good guy.
How did I know which one? I've got, next week or whatever, we can pull this up and I can go through it. But I've got spreadsheets and everything, all the trades, every trade, every account. $670,000 just on VIX right there. VIX and UVXY. Took $146,000 of buying to make 670,000 in closed trades. It's basically 523 in sheer profit just right there.
Mm-hmm. Yeah, that was literally the perfect time to do that because there was the talk about the COVID, and it'd been about 10 years since we had a market crash. So things were like literally lining up because we know crashes happen roughly every 10 years or so, roughly. So there
Yep.
was a lot of pieces that kind of just fell together during that time. And that's when I first got into trading, believe it or not. It was like that was when I like heavily started leaning into it. I'd been trading since I was 17 or 16 when my dad opened my first brokerage account and bought me Apple shares. That was when I got hooked on it. But it wasn't until that, like 2019, 2020, that I really got into it.
You can see here's some of the trade. Like started in January. January, February, March.
Yep.
And some of them were losses. These blacked out ones expired for, or that was, I guess that was part of the same trade right there. Two different buys, one close right there. Two different buys, one close. Um, but some of them went to zero. Like this one went to zero. That was a loss. So not everything worked. Yeah, there was a $7,000 loss right there for my mom. Yeah, $4,000 loss for my dad right there. But there was a chunk of 20K right there in Kimberly's retirement account, chunk of 30K in my retirement account, chunk of 20K in my other retirement account. So
Boom.
that's it was a wild ride. I have it all graphed out too. Like I can show you exactly where I got in and out on this chart, broken down in a lower time frame. So it was a wild ride, and I hope to do it again. Like one day I want to make $1 million in a day. The biggest day I had during that, there were lots of ups and downs. It was not just straight up glorious the whole time.
Oh, yeah.
There were lots of swings in the market. My biggest update was $856,000 up in one day. But I had lots of like 200, 300, $400,000 down days in that whole run too. So I know what it feels like to make and lose more, like 10 years worth of money. $856,000. Think about that. I was making $40,000 a year at that time. That was 20, almost 21 years worth of my money making money, almost 22 years worth of making money, $856,000 in one day. I mean, that psychologically, I mean, at the end of the day, I felt like I had run a marathon that
Yeah,
day.
I bet so. I bet. It's like driving 18, 24 hours straight. You're just exhausted.
Like there was not a moment like I was sitting there literally shaking, watching everything during the day. I was closing things, opening new things, just managing $856,000 one day. And then you come along and you lose 400,000. Well, that puts a pit in your stomach. You lost 10 years worth of you busting your butt working in one day.
Yeah,
Um,
that's
it's it
tough.
like for all the glory it was, there were big ups and downs. A lot of people around me couldn't handle it and just went to cash. Um, I was sharing stuff. I was trading in a group, talking to people. A lot of people around me could not handle it and just straight up went to cash, sat there, just watched it all. It was difficult. And the crazy thing was, VIX went right to my target. I had a target in mind in a day that, like, in mind. And funny enough, it stopped dead cold on options expiration day for VIX. This was OPEX right here. This peak day, wherever it was, right in here. And that peak right there, that Wednesday, that was the option. That was the last day to trade VIX for March. And that was the end of it. I sold out that day right there, and we didn't go any higher. I never bought back in VIX either. We hit my target was $80. $80 was my target. When we hit $80, I was out. How did I know $80? Elliott Wave, all my fib lines and stuff. I did it more crudely back then, but I had basically an $80 target. And when we hit it, and it was not this target, right? It was not this pullback. It was a different projection from down here. When we hit it, I was out. Didn't get back in. I didn't think we were going any higher. We didn't go any higher. It was possible we could go higher, but we didn't. So, and there you go. So we'll
There it is.
see you on Monday. We'll be off the rest of the week for Market Masters. Blake, I think you had a replay to play.
I do. Little Christmas special.
Merry Christmas,
So,
everybody. Enjoy some time with the family. Blake, Merry Christmas to you.
Merry Christmas, Jeffrey.
See you again next week.
All right. See you next week, brother.